Hello, my name is Eric Kulwicki, and I'm an institutional investor with over 20 years of investment experience, working with large institutional clients and the general public. So, this is my quick outlook and positioning update. All right, so here we are, right? So, the U.S. is now in a heightened conflict with Iran, and oil prices have spiked. So, now what? Global markets has sold off a little bit, credit spreads have widened, U.S. dollar rallied, and gold has kind of been chopping around, but still trending higher. Since investing is personal, you need to figure out if this Iran conflict actually changes your investment strategy or changes your underlying investments. Different investors have different ways they invest, which is totally fine. For me, I just like to be patient and let the markets come to me. I prefer a fat pitch down the middle, swing at that instead of just swinging at anything, right? I don't have to swing at anything. Just give me the fat pitch right down the middle. So let's go through the markets. Global equity markets really haven't sold off that much from their highs. In any given year, I'm assuming equity markets will fall 10% from their highs. Simple math. Maybe it happens, maybe it doesn't. As someone who's been doing this for many years, I already have those investment plans to implement regardless of what the market actually does. So we've seen some equity market declines, but not enough for me to broadly increase equity exposure. Still bullish on US and international equities, but valuations aren't great, which is why I'm only slightly bullish at the moment. Nothing has changed for me from a long term strategic perspective. I could prefer to remain diversified across higher quality growing companies across market cap, geography, and investment styles. If certain areas of global equity market do decline to levels I find attractive, I'll add equity risk. If not, I'll remain patient and let the markets come to me. Again, I'm just waiting for that fat pitch. No one's forcing me to swing at anything. Within that risk assets bucket, any things that are volatile, I still like diversified exposure across high income generating assets and strategies. So that includes option income, dividend growth, stocks, closed end funds, tactical income strategies, etc. Still moderately bullish in this space. Credit spreads really haven't widened that much. They're still pretty tight, so definitely not wide enough for me to take on additional credit risk. Closed-end fund discounts to NAV are still tight as well, so really not that attractive for me to get overly aggressive there either. For me, high income generating assets and strategies can drive income, but I also consider them a source of dry or powder to take advantage of global equity markets if they sell off a bit harder and become more attractive. If the equity markets don't move that much, these asset classes and strategies are still generating income, and that totally works for me. On the currency side, US dollar index has rallied a little bit, but I think it might just stay in a range of maybe 100 on the upside and maybe 95 on the downside, unless the Iran conflict spirals out of control and even a more dramatic flight to safe haven currencies pushes the dollar index above that 100 level. Take a step back, looking out a little bit longer, I do think the dollar might have some fundamental weakness to it. So looking past short-term volatility, the dollar could have fundamental downside pressure from here. Gold's still trading above that $5,000 an ounce level. If you know me, I really don't have fundamental views on gold. And I don't really think it's a consistent hedge on anything. It changes all the time. So what I will do is I'll follow its price technicals. And at least for right now, technicals are bullish. So I'm sticking with a slightly bullish view on gold until the technicals change. The only area I had some conviction in is within WTI crude oil. So in my last outlook and positioning piece in December, you can feel free to look it up. I was more bullish on oil in the mid to low $50 per barrel level. And I've been saying for a while that WTI crude oil kind of just trades in that mid to low $50 level on the lower end up to sort of that $90 level on the upper end. So anything closer to or below that $50 level, I'm more bullish. Anything closer to or above that 90 level, I'd be more bearish. So if you took a simple glance at a price chart of WTI crude oil, it showed that it could trade up to 120 bucks a barrel, and that could be a point of resistance. Well, on March 9th, WTI crude oil spiked, trading up to just under that $120 level in pre-market futures trading, and then quickly sold off from there. Now it's back under 90 bucks. So a lot of market movements. People ask, okay, well, what have you done in your own technical strategies that you manage? All right, since my last outlook and positioning piece in December, the only tactical adjustment I made was really in early January when US mid caps continued to rally to my price target. Hits a price target, I reduced some of my leverage positions to US mid caps. That brought my leverage positions in my US Core X strategy to a broadly neutral level. In my global unconstrained strategy, I haven't changed anything since my last outlook and positioning piece. In that strategy, I'm still diversified across global equities, high income generating assets, and strategies. In global unconstrained, I continue to have small leverage positions in US biotech, mid cap, small cap, diversified emerging markets, and Chinese equities. So overall, from a tactical perspective, unless areas of global equity markets sell off harder from here, I'm just going to remain patient and tactically rebalance when and where it makes sense to do so. All right, that's it. So if you want more details, please read my full outlook and positioning piece on my Kulwicki Insights website. If you have no idea what I'm talking about, but would like to learn more and learn how I think about investing, you can always check out my online investment education courses where you can learn at your own pace and on your own time. Thanks for watching.